Good evening, everyone. This is Anthony, Wall Street Trader at 6:17 p.m. Eastern Standard Time on Tuesday, July 27th, 2021. This is not financial advice, and the video is intended for educational purposes only. Stay up to date with my latest video. Click the subscribe button with the bell next to it. You'll get notified. Twitter.com link in the description below. Click on that. Subscribe to my Twitter feed. And by the way, there is a like button with a little thumbs up. Click on that if you like it. Better to do so now if you can. I like when these videos percolate to the top so that we can get more backers to this video. So, all right, so let's move forward into the graph. So here's the graph US dollar pair. As I mentioned on the last video, my concern was that we would go below this yellow line. Well, we did not go below the yellow line. In fact, on the last video, a week ago, the graph US dollar was trading at 49 cents. Right now, we're at 55 cents, over 15, maybe 12 to 13% higher than we were a week ago. And yet, we still remain in this resistance line here. I'd like to see us break out of it, but we have to take this day by day. Now, I did not buy any additional positions in GRT. And I did not sell any additional positions or any of my positions in GRT. So I'm still 100% baked in to my original thesis that I brought up, on a couple of videos ago. So, keep your eye on the graph relative to Bitcoin as well, because we have a similar ominous pattern here. We have a resistance line. Resistance line looks like we're going to resolve between now and the 28th. What did I say on the last video? I said we're going to resolve between the 20th, which I said a week ago, to now. So we didn't resolve yet. We're still bouncing along, meandering along this bottom lower line of support. I'm worried about this spot. I don't like this spot. I prefer we start bouncing back up, filling out the rest of the triangle at the very least. But a drop here would not be good. We would want this to burst up. So we'll keep our eye on this and just understand the reason why we're down over the week. Bitcoin flew up, but the graph relative to Bitcoin's down. Why? Well, look at the actual definition here. It's relative. It's the graph coin, the raw graph coin over Bitcoin. So if Bitcoin flies high really fast, the altcoin market always lags behind. But you knew this because we've already talked about it on several of my videos in the past. So I want you to keep your eye on that. The graph over Bitcoin is the pair or the inner strength of the graph. So if Bitcoin tears off, the graph kind of takes a back seat. However, it's not to say it won't return. If Bitcoin stays stable over the next few days, I anticipate this will start to come back. It always does. I've always seen it happen in the past. So that's a good sign as long as Bitcoin remains in its lane. Now let's go over to the Bitcoin US dollar pair, which is incredible, which is doing great. And I'm really happy to see what's transpired here. Taking a look at this, we see this line was here a few weeks now. And I've been talking about the fact that we want to get over this line to make it meaningful. I was worried we might start breaking down, and I'm glad we didn't. We actually broke up. Once we passed this line, I knew for sure we were going to go to way new higher heights. Tweeted it out right as it was breaking out. I said, this thing's going to blow. And sure enough, it blew. Over here, it started forming a short-term triangle pattern. I was kind of hopeful here that we'd blast off, and we did after I tweeted that out. I was hoping for 41 to 42. Didn't get there. Not a problem. So now we're kind of back down here. It's going to be a cup and handle. Don't know. So right now it looks to me like we're kind of on a new support, very short-term support area here, and we'll have to take a look as time goes on. But I'll tweet this out, see where we're at. In the meantime, what I also want everyone to understand is the Bitcoin dominance pair. And like I've mentioned, Bitcoin was its healthiest when Bitcoin is over 50. And what has happened is after it started going below 50, the floor was pulled, the rug was pulled from underneath on the Bitcoin US dollar pair. Look, we need a large currency base in the crypto market to fuel the altcoin market. There's no question in my mind. It is the financial backbone framework in how this, in terms of how money works. We need Bitcoin to be strong here. We need it to be over 50 in order for Bitcoin to rally, and as well, within short order, having the altcoin follow suit. That's how this ebb and flow works. Bitcoin rallies first hard, and then altcoins follow after. So we want it to rally hard. Honestly, we wanted to rally in bursts and then settle down, let the altcoin catch up. Then let Bitcoin burst, and then let the altcoin market catch up. That's the way this game is played, and if you can time it, great. I don't personally like to time it, but I kind of sense it's going to happen when it happens, and it's all because of repeating patterns here. It's clear. So what do we have here? We have something called a upward ascending triangle, and it's hard to say where it's going to go. But if I was to draw this here and then draw this here, clearly something's going on here. So by the end of this week, or probably by tomorrow, we'll know which way this resolves, which would be good for Bitcoin. I think Bitcoin would rally on an upward trend on the Bitcoin US dollar pair, assuming Bitcoin dominance can pull through here. So this is an underlying technical to Bitcoin US dollar. Anyway, so that's kind of all I have. Now, when it comes to the graph, I just want everyone to understand something. They're doing a lot of work. There's just so much little bits of information that it didn't really make sense to cover anything in particular on this video. Now, in terms of salient points, I think the curation, allowing folks to curate their own subgraphs, I think that's a great idea. They kind of opened it up to the world. And like I also mentioned, there's Streaming Fast, who is a company tapped by the graph to help them move the needle on the infrastructure side. Infrastructure is important here because you need something it's not just that part, it's the marketing part too. It's the adoption. How do you get people to adopt this stuff? You need business leaders in this thing to help drive it. We can't all be techno junkies without a sales pitch. I mean, let's face it. I see plenty of these cryptos failing because they just don't have the right sales pitch. And even further, even if they do, sometimes it's not at the right level. Everyone can understand it. Anyway, so I just want to point that out as a general rule of thumb. The ones that will win out are the ones not only that can sell it, but they can bring it down to the lowest common denominator. But obviously, the technology has to be great as well. And I think the graph is right in that camp. Anyway, I'm out. We'll catch up soon.